Well, Justin is getting his drink and he told me to start it. So hello guys to the weekly live stream. First off, I'm just going to go over a quick chart because people think, "Oh great, it's time to buy the dip. Everything's going down. You buy when there's panic in the street and you sell when there's hysteria."
Josh, would you say we stand at the precipice?
Shut up. If you want the inside scoop on that, we just posted a blooper video on Twitter. So let me show you guys this. This is a great tweet from Jesse Felder when he was basically just showing a long-term chart of price to sales of the S&P 500. And this up here is going to be the 1999 bubble, and down here we're going to see the 2008 bubble. Look at how much further we were up in 2022 during the massive froth that we saw. We are, and we've already seen like a 20% decline in the actual stock market, but we need to look at perspective here and look at a long-term chart adjusted for inflation. And we're not even back to the same level that we were in 1999. I mean, we just got below that. I mean, we still have another 20% down to go if we want to get back to we were just in the GFC. If we really want to see like fear, I mean, we still have like 70-80% where you could get just decimated. I'm not saying this is the greatest chart of all time, but it is a possibility for something. Oh, and if you really want to be scared of the long-term outlook of the financial markets, you could look at Japan. I mean, they've just gone through absolute complete mayhem. What, Justin? You're muted. Josh is not paying attention to the comments.
Sorry. Okay. Yeah, Josh. So the thing I would note is that I think we tweeted this out earlier this past week, is that you saw CDS's credit default swaps spike up. So here's kind of like, and it was with Credit Suisse. So here's kind of, the takeaway from that. The two problem children that always seem to come up when it comes to the European banks are Credit Suisse and Deutsche Bank. Now, I mean, I have no special insight. It's just simply more along the lines of it's like in the GME or in the Bobby world or whatever, right? Whenever you have issues with stocks coming up, it's always kind of the same problem children on that side. Either way, a credit default swap is just a sophisticated instrument you do to offset risk in a financial institution. So it's basically like insurance against like the debt of a company going bad. The takeaway is that when the cost of buying a CDS goes up, that suggests that the person you're swapping the risk with wants more compensation in the form of premium. This suggests that they view the underlying as being more risky. In other words, they view Credit Suisse's debt as being more risky. That is an assumption that Credit Suisse is more at risk of defaulting on their debt. And what's interesting is that we're not back to what was it, Josh? Help me out with that chart. It wasn't quite 2008.
It was over the COVID level, but it was not quite a GFC, and that is definitely concerning. That is saying that the market is pricing in a Credit Suisse at a higher risk now than it was during the peak of the COVID crash. So that just kind of shows the fragility that is in the system right now. We've yet to see anything. I don't know how much leverage is in the system right now, because if you really want to have like a severe crash, it needs to come through leverage, because that's what really blows shit up. But I don't know if how much leverage is in the system. There's no way to really know that, because there's no way to know what deals are done underneath the table. That's why there's no way to know what the possibility is with GME.
Yeah, and like the other thing too, this gets back into like I guess we'll get into the questions here in just a second, but this is going to be one of my themes. I've said this for a very long time, and I don't know if anyone caught PiFi's stream earlier today, but what's going to blow this, or if MOAS does happen, and I view it as an eventuality. But just because, guys, let's remember, just because something is inevitable doesn't necessarily mean that it's imminent. And I think back to the lesson of LTCM, Long-Term Capital Management, which was a hedge fund that was run by some very smart people. In fact, the options that are priced today using Black-Scholes. Scholes was one of the people at LTC. I think it was Scholes. It was just led by John, or whoever it was, like the best and the brightest, from academia and the markets were at LTCM. And these guys, these were really smart guys. They're, number one, if you're looking in markets, typically the bond guys are the smartest guys in the room, for the most part. And then these were the smartest of the bond guys. LTCM was this lever. It was basically a bond arbitrage hedge fund. And what blew them up was the assumptions, is what they assumed that they knew to be true, which wasn't true. In this case, it was a sovereign defaulting of their own internal debt. I think a similar story is going to play out, and is playing out right now with the MOAS situation, where, again, as Gurk and other people note, yes, they have changed the rules. Yes, they have multiple ways of kicking the can, and they've introduced more ways than they had before of kicking the can. They've changed the rules around liquidity. They basically have stacked the deck in their favor. I don't disagree with this. They clearly have done this. The peril is, I think, is going to arise is when you have emergent properties. In other words, you have various ways that these complex systems. Josh, I'm not going to go hear me out. That are going
No,
to.
no, I was reading the comments. Sorry. I was.
Okay. Yeah, Josh. Yeah. By the way, yeah, Jonathan, thank you for mentioning that. Like MOS will happen as soon as Josh shaves his head. He's being very selfish by not doing that. Just
Well,
to be clear.
I think Cool Cat would be very upset if I shaved my head. Therefore, I shall.
Well, the dumpster at Wendy's awaited. Anyway, so the takeaway is that when you have all these complex systems, all these can kickings that are going down the line, there's going to be some situation where if the left hand doesn't know what the right hand is doing, that's going to get out of control. And the process of getting out of control, it will get out of control and fail in a way that nobody thought could fail before. It will seem so obvious after the fact, but going into it, we're all going to be blind to it. That's just the nature of the thing. So that's my take, is that you're going to have complexity, and particularly the emergent properties arising from the complexity of how these systems interact with each other. And essentially, the very systems that are designed to let the shorts, continue to warehouse or short position, will eventually become overloaded and start fighting with themselves, and that's what's going to, I think, kick off the fireworks. But before we get there, there's a huge, long road to go. Expect to see the regulators intervene. Expect to see the stock being frozen. You think it's bad right now, waiting for MOS? Wait till it runs up, and then the SEC puts a 20-day halt, and there's another 20-day halt. Just wait for that to happen or whatever, right? Because like I said, it's not going to be you wake up one morning and bam, it's going to be there. There's going to be some emotional roller coastering.
Me and Justin have different views on this. Let's get into the questions now. So this one's going to take a long time. Jonathan, Justin, you give your views and I'll give mine. What if they can't close because it's too big for them to handle? What if this is MOS? On the flip side, what if they're able to cover the share dividend split this time in next earnings? GME splits again. No sell, no sell.
Oh, I would say start with a pinky if it's too big to handle and work your way up. No, sorry. Excuse me. Mind out of the gutter there. Mind out of the gutter. Let's see. Jonathan, so I don't have any insight to add to that, but I would note this. Right now, I think the regulators and the people that are short and the DFMUs, so that would be the OCC, the NSCC, the COMEX. The COMEX relate to GME, but it's the same bullshit. The DTCC, whatever. All of them right now, I think, have the strongest of motivations in order to keep the can going for as long as they can. They also probably realize that the writing is on the wall, and they also probably realize that when this blows up, it's going to... the collateral damage is going to be massive from this. Okay, so just bear that in mind, that right now, all the participants, nobody wants to call bullshit on anyone else, because the first person to call bullshit on someone else, the music's going to stop, and to put it bluntly, that's going to fuck over everyone. So bear that in mind. But I also think it's going to come to a point too. And think back, have you ever saw the movie Margin Call? There's that scene with Jeremy Irons, where they have that early morning thing in the boardroom, where it's what you can. Josh, help me. Is that there are 3 ways to make money in this business. You can either be first, you can be smarter, or you can cheat. And I don't cheat. And while I like to think we've got a hell of a lot of smart people in this building, it sure is easier just to be first. And so sooner or later, you're going to have someone who's going to buckle or whatever. Right? Someone's going to buck the trend, or the trend will be bucked by, some emergent property. And when that happens, I think you're going to see this reverberation that's going to kind of implode outwards. I would say too, channeling Mannarino. If you don't follow Gregory Mannarino, good person to follow if you like following the markets. And also I really like Rickards too. Both of them kind of, and this is me.
Can I hop in here, Justin? Because I have different views on the share dividend split. I don't think it's actually...
We're talking about that?
Yeah, that was
completely off topic. I'm sorry, Jonathan. my bad.
Yeah. So he's basically asking if the share dividend split is going to cause MOS. If not, what's going to happen to that? I think that's the question, at least. And
yeah,
I don't think it's actually going to do a whole lot, because how are they actually going short? Let's just kind of think about it. If MOS is possible, I think it's possible because there's so many forward swaps between parties. Let's say I'm a mega corporation, Justin's another mega corporation. I personally take out a short position on GME, and we just are doing this between parties. Let's say I'm short 100 million shares of GME from Justin. Justin says, okay, I'll take you up on that. This is just a derivative. What happens if a share dividend split happens in that circumstance? Well, technically, you guys, these shares are not being seen. So how is this actually going to affect a count? I don't think it will. So and if you really want to think about it deeply, well, if all GME ever had to do to Cosmos was a share dividend split. Why wouldn't have they done it within the past year? It just doesn't make fundamental sense if this is going to Cosmos. But what will it do? I think it will provide more opportunities for retail because the stock will be cheaper to have more FOMO, to buy more. And I think it will probably be better, especially putting more eyes on the stock.
Yeah, and here's something else on that front too, right? It's that, like, go back to options. Like, I very much agree with Girk on the front that I think what will kick this off is that retail has to FOMO in and keep FOMOing into options in a clever way that creates the gamma ramp to go up. And if you basically drop options, if you cut options, see right now, because options, you can only buy options on 100 shares or whatever, right? There's a very high bar. I mean, you can play with options, but you've got to play with not necessarily big boy money, but you really can't be playing with, like your weekly Uber money either, if you're playing with options. You cut the contracts by a quarter, then all of a sudden you might have more retail interest in FOMO just because the bar has been lower. So I think that's an example of emergent property that's, coming out from all of this. But cover the dividend. The other thing too, Josh, is we might as well just mention this. When we can come back to this later on the stream. There's questions, just add this. This is what I was trying to do real quick.
Just zoom in a little.
Shoot. Hold on. I'm sharing it in StreamYard. Okay, so here's the thing, right, guys? I know if it's a little hard to read. I'll just read it real quickly right here. What's interesting about the OCC and like
Justin, you have the wrong format up. That's not the one you sent me.
Yeah, shush. I'm gonna put it up on the stream. Anyways, so the key thing on this one is that the OCC is treating it as a split. Like right here, it says pursuant to Article 4, blah 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 blah. Games operation should be just as followed. GME has acknowledged the 4-for-1 stock split, and that's kind of that first line right there. And let me make this go away. We can go back to here we go. And so the reason I mentioned that is that, like, I actually don't think that's the way they have historically done it. And again, like, Girk mentioned on the stream earlier today that the fact they even released a memo on this was interesting. This is what gets back to what I was saying before. Like, whenever you have like irregularities, particularly with compliance,
I don't know if this is an irregularity, because how many people like with the GME community, people are always looking for anything that happens within GME. If a random stock does a share dividend split, how many people are actually actively looking to see this kind of data? I don't know. I don't like. I would say no one else is like when you're a hammer, everything looks like a nail.
Yeah, that is very true, and that is a very what the mind seeks, the eyes find. So yeah, I get that. But anyways, we can come back to that. But let's see.
It seems like we're out of questions already.
Bobby. So actually, Bobby is an interesting.
BBY was super interesting. So Justin, you give some thoughts.
Yeah. Okay, so the current put wall, as I understand it, expires on the 15th of July. When's their annual meeting, Josh? Is it the 14th?
I would never know. I don't watch any of these streams. I'm not a Pi-Fi midday streamer too much like Justin is.
Oh, you have real work to do.
Yeah. Well, real work, yeah. I actually am busier now, so I don't watch the markets as actively anymore. I didn't even know what GME did on Friday because I've just been nonstop.
Yeah, so here's the thing, right? Like, you've got this put wall that's suppressing the price of Bobby right now, and the put wall is like something that'll back up. If nothing is done, it expires on July 15th, so this coming Friday. If that happens, and with all the calls that are still on the chain, you could see it easily rocketing up. I think this is a market mechanics question, so look to Girk, not to me, for answers on this front. But I believe I recall him saying that if it gets to $10, like, they would have to hedge the entire fucking float in order to manage it's just insane.
I mean, the longs could just really take control, and I think that the board member knows this. I mean, the board's all been buying in. It's looking extremely attractive for BBBY. I did close most of my positions. I have a very few amount up, but over this next week, I plan on repositioning for the July cycle. I think we can talk about that a little. As to what our plans are. I don't know if I'm even going to target the 950s. I'm going to have to look at the option chain, see what's liquid, see what the prices are. I do. What day exactly do the shares change? Is it Monday of the 22nd?
So I think
it's Wednesday, or I don't know.
So you're asking for GME. So I believe what happens is at the end of business on the 21st, sometime after the markets close, whatever, right? You will see like all your GME positions disappear from your account.
Monday.
No, the 21st is a Thursday.
Thursday. So next week. Okay, that I don't know what that's going to do to the OPEC cycle. I'm telling you, I've really been inactive on the stock. Oh, LeBanc, 5,000 shares, very, very nice. I plan on picking up probably quite a bit of shares because they're cheap right now. Option pricing has been a little bit elevated because the implied volatility is up a little just because of the velocity of the moves. But if next week we just kind of chop around, I do plan on picking up a hefty amount of BBBY, probably a lot more than GME, like at least relatively, and just because it has a higher chance of exploding. GME, I think, has a higher probability, but BBBY, you'll get way more asymmetry, and I really like the play right now. It's starting to really look interesting.
Yeah, Josh, so we just put some data. Can people see this? Okay, Josh, is this? Oh, whatever. We'll just have to make it work.
It's pretty shitty, but it's okay.
Okay, well, so it's a calendar or whatever, right? So let's do a quick review of this front or whatever, right? 15th is Friday. That's OPEX. It's also 28 days from the June NOPEX, whatever, right? So there's a lot of interesting question marks of what's going to happen on the 15th. But the point is, at the close of business on the 15th, you start the T+2 cycle. So as I poorly understand this, that means you've got T1, the 18th.
Monday and Tuesday.
Yeah, and then the 19th. And then I think they have till the opening bell on the 20th of Monday. So they can place orders in pre-market. And if they can even use like dark pools and that thing, which means that, the orders will get distributed throughout the day. They will still print on the 20th, but they might not print all at once. But the point is, like, this is going to be particularly interesting. Josh, I want to call your attention here to the 18th. Now, go away, Google. Because on the 18th right here, this is actually, I think, the date of record. So if you don't hold shares in your account by the end of the 18th, and I don't know how the share recall works with this, but my assumption is you would have to recall by the end of the 18th. But that's me guessing, guys, so don't take my word for that. This is when you take the snapshot of that. And then on the 21st, at close of business on the 21st, this is when you would essentially see, like, let's say you would hold option contracts. You've got, I don't know, 5 contracts for like $100 strike, January, whatever, for GME or whatever, right? You would see those option contracts disappear the night of the 21st. And then sometime before business opens on the 22nd, you would see those 5 contracts replaced with 20 contracts. And the strike price would go from $100 to $25 for that. So I think that's how it works.
Yeah, I do plan on picking up. I plan on leaving quite a bit of capital in case there's no movement Monday, so then I can have another position. But the majority of my position will be completed by Friday. But I'll probably enter the most by Wednesday, Thursday, Friday. Leave a little bit of capital available for Monday, and then just kind of ride it out, see what happens going into. I'll probably I probably won't sell too much at all next week unless we see some real movements. But if let's say OPEX does run this time and it runs with pretty heavy, and then we have the split, it could get really juicy going into the week after that. So there's actually a decent chance that we start to see some real firepower coming at this. But I'm definitely not going to hype it up too much, but I personally am extraordinarily excited.
Yeah, so the way I would put it too is, like, I mean, for myself going through to, like, I never really closed that. So, like, the way I do options, it's so shitty, and, like, for God's sakes, don't do what I do when it comes to options. Like,
I recommend it against absolutely everybody.
Like, my attitude, this is the real estate investor in me. It's like, oh, you buy the position and then you sit in the position. So, like, long dated calls or whatever, right? I'll do that. That being said, for my June play, I bought August, October, and some January contracts. And so my August ones, they're starting to hurt. But the other one, whatever, they are what they are. But I also picked up some puts on Thursday. Yeah, sacrificial puts. Yeah, sacrificial puts. So if you, again, like the live stream earlier today, I'm curious to see what's going to happen on Monday and Tuesday. If we see them trying to smack the price back down again, PiFi mentioned that, I think it was March earnings, they did something very similar in that regard. But anyways, curious to see what's going to happen on that front. So anyways, I mean, I guess you say I'm already like quasi-positioned, but I think when I start writing through OPEX, I've gotten much better with my trailing stops, actually making money, believe it or not, instead of, seeing bright red all over the place. So I probably will ride that one up. My end goal, however, would be to try to exercise as many calls as I possibly can, because I want some shares.
Justin.
Yeah.
How many shares do you own, and how many do you plan to own over the long term?
Oh, so
but you have a massive option position, like massive.
Yeah, I've got like a couple hundred shares DRS, and the reason I DRS them is just to hedge brokerage risk. So back up just another. There's an example of an emergent property that's playing out or whatever, right? Not that I think DRS is going to cause MOAS, but DRS might be like another snowflake that hits the avalanche in some otherwise unforeseen way that's going to gum up the works. Anyways, if I executed all my option contracts post split, I would be hundreds of thousands of shares. So.
Like Justin has a lot of firepower at this. Long term though, I define long term like a post MOAS world. I don't plan on holding any. Do you? Maybe
afterwards.
I'll definitely have one forever. That's for sure.
Yeah, one for. So I think that the answer is like I do think like GME actually is going to go somewhere, and I'm kind of curious to see where this pans out. One of the biggest things that I think that hasn't like gone into the zeitgeist yet of the GME community is kind of like the now what problem. So just close your eyes and picture this. You have MOAS that happens. You're able to like navigate all the bullshit. You navigate the emotional roller coasters, the regulatory bullshit that gets thrown out, the allegations, people being pissed off at you, whatever, right? So the point is, okay, now great. You're now standing in a situation where you essentially have had a singularity that's opened up in the equities market. So GME and probably others, Bobby or whatever, right? They sucked in all the value as the shorts have had tried to close, which has crashed the rest of the market or severely depressed it. Well, now what are you going to do? In other words, that's not to say like, let's say here's a company I really like, Franco Nevada. Or First Majestic. There we go. Yeah, First Majestic, whatever, right? There's other companies out there, particularly commodity companies, which I very much like, who are good companies, they make a solid product, and after MOAS, they will still continue to make a solid product. But they're going to be on a massive sale on this regard. So I think that, sooner or later, people are going to have to figure out, okay, well, listen, like, what is it that I actually want to do? And particularly if you have, the people who are in MOAS, like millennials and Zoomers, like, they're going to have the rest of their lives long, decades, in order to figure this out. And so the thing is,
not if you spend it all on cocaine, hookers, and below, and then you die at a very young age, but satisfied.
Yeah, that's another good quote from Girk right there. So, anyways, the reason I kind of I touch on this topic here is that people like legitimately, it's going to be like the problem of winning the lottery. Like if you look at people who've won the lottery, like it'll generally ruin their lives. In that regard. And so I think that a huge way of managing this is like, what do you actually want to rotate into? Like in my case, real estate, because that's my bag. That's what I do, but it's not only just real estate. So
you're a metals guy too. All right. Well, yeah, that was the only question. How many shares do you have? But I do think that is very important. The now what issue, what happens in a post-MOAS world as to what are you going to deploy capital to? I'm shares wise very, very low on shares. I'm mainly just trade options, and I'm very nimble in and out. So like I'll go from anywhere to having a humongous percentage of my portfolio into GME going into these cycles, and then I'll return to a relatively low position of my portfolio. I'll always kind of hedge a MOAS style event, but shares just aren't my bag because my goals are different from everyone. I'm a 19-year-old kid who is focused on cash flowing businesses so I don't care what my portfolio looks like. I want to swing for home runs, and MOAS would be an extreme home run, but how do I capitalize on that at the absolute highest capacity? You need as much leverage as possible. I do that through options that I plan on exercising. Everyone's risk tolerance is different, and mine is virtually absolutely unlimited. I mean, I like Ryan Cohen, and everyone's kind of talking about this, but I just don't buy growth stocks. Like before this, Justin called me a complete boomer because I only buy really just extreme cash flowing commodity macro viewed usually not even like US traded exchange companies. I'm a very boring, I would love to buy like an African alcohol company that just yields 8% forever. That's kind of more my bag. It's never really high growth names that I don't know how to value that. So Justin, maybe you talk about this. Congrats on your 30-day fast. I just got off one yesterday too.
Yeah, it's about time for me to start another. I need to lose this nonsense right here. Yeah, so what it was is I used to be like much heavier, like almost I was like 290-ish or whatever, right? People in Texas, big people, big cars, etc. And so there's a very good friend I have who recommended a book called The Pleasure Trap, and basically talked about fasting. And the thesis of the book is that we as humans are wired to do three things: we seek to maximize pleasure, minimize pain for the cheapest cost possible. So those are the three things we're hardwired to do. And what's happened is that we have evolved our world quicker than we have evolved our genetics, in the sense that like back in the day or whatever, right? When we lived in the savannah or whatever, jungles, etc. Like we didn't have a Whole Foods, we didn't have Trader Joe's or a Kroger or whatever you could just pull up to or whatever, right? We didn't have mega deep stuff, fried Oreos and all this other garbage, ice cream, cookies, cakes, etc. And so what's gone on is that we've been hardwired. Think like the three white poisons, sugar, flour, and salt, or the or just like the taste buds of how we like will seek out sugary, fatty foods, because like in the wild, like that's what we needed to do. It was hard to get calories. But since then we have the opposite problem, there's too much. It's the problem of abundance. It's the lottery problem. There you go. And as a result of that, what's happened is that you have this perversion where you have the good scientists, Nabisco or whatever, right?
I think the recommendator just hopped in the chat.
Uh-oh.
The pleasure trap.
Yep. Yeah. The G 100%. Smart man right there. Anyways, so the the fallout from that was that we essentially have had kind of like, this hacking of like our neural pathways, and we're kind of like all addicted to this garbage. And so when we went on the fast or whatever, right, it was hard getting on the fast or whatever, right, in like the first 2 or 3 days. It's a little funky, you've never done it before, but like by day 4, day 5, you kind of get rocking and rolling. And if you go beyond day 7, that's when you can get into really, really deep ketosis. The other thing you want to look into is autophagy. So like when companies are going through hard times or whatever, right, they do the rank and yank. They basically say this: we don't have any more time for this bullshit. We can't keep a bunch of like worthless employees sitting around drawing a paycheck, whatever. Like no, we have to get lean and mean. Your body does the same thing. So kind of like we'll shut itself down, use it to like clean out the bad cells or cells that are like on the margin, and you kind of use it to regenerate yourself. And if you really want to go off the deep end, you can talk about like not life extension, but it's probably a very good thing. Think about like an escalator, an elevator, or your car or whatever, right? Every set period of time, you need to take the entire thing apart, clean the pieces, change the oil, et cetera, put it back together. I also say this too, is like when I was in the deep fast, like around day 20 or so or whatever, right, some stuff, I'll keep it as clean as I can, but there is some stuff that comes out of you that you just kind of look and like,
where
it's
like what part of the body?
Josh, what does normally come out of you? Don't answer that. Josh, if you have it, we'll follow up off stream that front.
Yeah. So, what was your process once you get to 20, then to like go another 18 days?
Well, you just kind of start blowing and growing. You kind of get on cruise control. So there was another thing that was going to at the time. I mentioned this before, but I was taking care of my grandmother, who I was very, very close to, and she has since passed Alzheimer's and dementia. But I was her caregiver, towards the end. And so throughout all of this, we were also going through this major home renovation project because we did not want to put her into a home, and so we had to do some upgrades to the home in order to make it safe for her. So there was a lot going on, and so you just kind of stop thinking. Like I was fortunate enough to be distracted, because like my attitude is when I get bored, I start grazing. That's my again. There's a lottery
what
problem.
Happened? What made you break at 38 days? Like what were you going for?
Yeah, so the reason I was going for is the 3 things you can't source naturally. I didn't really understand this at the time: is sodium, potassium, and magnesium. Just another small tip: check out Cole Robinson's snake diet channel, snake juice channel. Really amusing fellow, but much more insight than I have. But eventually, I was just like, okay, something's wrong here.
Your mic is all fucked up right now. Like you talk too close. It's like you got to just kind of back up slightly.
Okay, how's this? Is this good?
Yeah, keep going.
Okay. So anyways, what had happened then was that I had I decided to break it, and I broke it in a really stupid manner.
Ooh,
like
what was the first meal? Oh, foie gras.
You don't break it fast. I was so sick. My folks live up in Colorado, and like I was this close to making the call saying, you guys, one of you needs to get on a plane and fly down to Houston to bury baby bird, because it's not looking too good. And I didn't make the call, but the fact that I was like one step away from making the call, that was like that's problematic.
To have someone hop on a plane to come visit you, oh man, I could only imagine. Like you gotta end fast with like broths, like slowly. You drink some broth, then you start with maybe a whole egg, like definitely not foie gras. That's probably that was a tough one.
And like the longer you go, the deeper you go into ketosis, the more gentle you need to be.
At least you didn't have like a pizza or something like that, or like fried food. Like you probably never would have recovered. All right, everyone's gonna hate us. We gotta get back. Oh, I don't think we actually. Stefan, I work in biotech. I'm a big shareholder since March of 2021. I only ask because I don't play options. I just buy shares with every paycheck. I just hold until I want to catch up. I think that's a very valid strategy. Just kind of average cost in through at time.
Yeah, so there's another buddy. We've never had him on stream, but one of the things that he and I are trying to need to work towards is getting him into a position where he can write covered calls. Because if you want, number one, if you hold shares, you have unlimited theta. You can just stay in as long as you want. You're playing the option games. Every day that goes by, that's one more day of value that's burnt off. But like I said, you have IV peaking on one of the runs. You write a few covered calls, and what's fun, this is a cool thing about the option chain being cut in half or being cut into fourths, is that options become much more approachable for the simple religious in a sense, or the poors, in the sense that if you have these shares or whatever, right, and you don't mind the risks that come from writing covered calls, although that is one of the less risky option plays that are there. Again, you can generate some income. And I think, again, Pi noted this, for the community, like this is actually something that can be meaningful, like, $500 a week or whatever, right? That's maybe not enough
buy another
to pay rent.
Yeah.
yeah, but like it's that starts to add up over time. So yeah, absolutely good strategy. Good strategy.
In the very corporate environment that I work in, I noticed that the older generations invest with each other. I just see investing in GME as investing with my generation, just like they do. That's very valid.
Yeah.
I see my generation much more the older folks. I just connect more with them.
Yeah, the other thing too is that like so if you ever go back and if you want another good book recommendation, check out The Fourth Turning. And so like so I was born in the mid 80s, Josh, you were born in the early O's. And so I guess that makes me either the oldest millennial or the youngest Gen Xer. And I tell Josh he's either the youngest millennial or the oldest Zoomer. So in other words,
I'm definitely a Zoomer. Fuck the millennials. I think me and Justin have that in common, even though everyone here is probably a millennial.
Yeah, so Josh and I, we're about 20 years apart, which is a bit kind of what you need for like a generation. But what's interesting is we both kind of stand on like the transition period between the two generations. Anyways, the reason I'm going on about generations, whatever, right? When it comes to the millennial generation, it's the hero archetype, according to the fourth generational theory. And the super, like each generation, there's four. They come in four flavors. Each one has their own superpower, and the superpower of the millennials, the hero archetype, is that they're very good at like banding together to get shit done. The last archetype or the last hero generation was the Great Generation. That would be the generation that fought and won World War One. Or it was part of the generation that did that. And so, in other words, when the Great Generation was dying off in the 80s and the 90s, the replacements, we were being born as that. But anyways, the takeaway from all of this is that the concept of the millennials like walking in lockstep as a hero archetype, this is a very old story that's been repeated, multiple times. But yeah, it's interesting to note that because it's you see these patterns that come up over and over and over again. So yeah.
Shane he's like fundamentally analyzing GME here. I just have no edge there, nor will I ever. I can't value growth, and that's just kind of how I'll always be. Phil, how's it going, buddy? How was Rebel Capitalist Live in Miami? It was fantastic. It was one of the best weekends of my life, just nonstop. Any key takeaways which you didn't know going into it? I didn't realize the quality of people that I was going to meet. I mean, I met some real big swingers, like some legit, like I'm actually like really good friends with Doug Casey now, and now I'm actually working for him and one other guy that is many times above and probably any other human that was there, including all the speakers. So it's really it was just fantastic.
Yeah, I met some people there too, but
Justin also had to leave.
Shush. So,
just key takeaways going into it. It was just fantastic. I don't listen to the speakers too much because I kind of know what they're going to say, and I listen to them all on YouTube. I'd much rather find a way to talk to the people there because that's where you meet the real superstars.
Yeah, let me just go back to Shane. So one thing right here on this girl, like I do think GME has GME is not a dying brick and mortar company. I'm really curious to see what Cohen does for it. I think it will be a very profitable going concern in the future. So my attitude is I'm very curious to see where GME goes. But as I was saying earlier, if you have a MOS event, people are going to need to rotate out of GME just because like they've got to do something with their wealth. That's not saying they sell all their GME, but like they're going to have this massive imbalance there. And so that's I think the kind of way I would approach it. But I see myself as maintaining a position in GME. So
how do you feel about Martin Shkreli? I don't know who that is.
Shkreli?
Do you know who that is, Justin?
The name sounds familiar, but Stephen, can you give us maybe
look him up and I'll go into the next question and start answering that.
Yeah, and so if you can give us some more data.
PiFire is unsure what the dividend will do. Tony DeNiro says it will not be the silver bullet. It will act as a normal dividend, and people are misunderstanding. I happen to agree with, I don't know who Tony DeNiro is, but I happen to agree with that statement. I do not think it will be the silver bullet just because I think for MOS to be possible, there has to be these massive, ridiculous amounts of forward swaps. And I don't know the rules behind forward swaps when it comes to forward dividend splits, but I would assume it's already kind of baked into the pie because these things happen pretty often. If that was an issue, it would have happened a long time ago. So I don't think this is going to affect it because the way they're going short is untrackable. And if it's untrackable, how is counting shares really going to make a humongous difference?
Yeah, I don't have anything to add to that. What I would say is that
I'm still bullish going into it for a FOMO point of view.
I do not think that the share dividend will by itself cause MOAS, but it's probably one of those things where it is a necessary but not a sufficient condition. Like I would say the same thing about DRSing. Like it is probably a necessary but not a sufficient condition, to cause this. You've got to have all of these little pieces, that come together or whatever, right? And when they come together, there will be things that emerge that aren't necessarily clear or visible, even from the experts, who know the market mechanics behind this. And somewhere along the line, something is going to break. Oh, here's an excellent example of that. When Fedwire went offline last year, was it February, whatever? And then swoosh, all of a sudden, you see that, that ramp up. That's an example of an emergent property when Fedwire goes down, and like that, you saw something come up. So,
was anyone actually bullish on anything? That's a really great question.
Oh, the dollar. The dollar.
yeah. The dollar. A lot of people are bullish like on gold, but for the most part, people were pretty bearish on asset prices as a whole. I mean, you always find some crypto bros who are always bullish, and we just hit the bottom and we're going up forever. That's just kind of inevitable.
There weren't that many crypto bros there.
Yeah. Well, there was. I would assume there'll be even less at the next one if I had to take a wild guess, or at least
the dumpster.
Undercover crypto bros. People were not many people were bullish on stocks, but a few like value names here and there. Some gold, like because the gold bulls, the silver. I mean, like the gold bugs and the crypto bugs are pretty similar with everything except they hate each other violently.
Which is so ridiculous. Yeah. Like it is so effing ridiculous.
But a lot of people were bullish on the dollar. So like not really asset classes though. And oil, actually, a lot of people were bullish on oil and energy as a whole. Martin was the guy. How did he create his own short squeeze? Like what was that the guy? I don't think that was the silver guy. That was the Hunt brothers.
Was that the Overstock guy?
I don't know. I honestly have I have no clue who.
Hold on, let me. Josh, keep going.
Well, there's no. That's the guy who was just in jail for jacking up pharma prices. Just got out. He was an original Wall Street bets guy. I have no clue. It's the pharma bro, I guess. But
I guess like my take on that is that like, and this is something I think you've seen from the GME board or whatever, right? It's that like, if you blow up the system, the system has the strongest of motivations to not let itself be blown up, and they will use everything they can, including the law or whatever, right? To stop people from doing it. So, I would say that like my thinking in this regard is that for the GME thing, like, they have to really make sure their I's are dotted and their T's are crossed. And I think they have, done that for some time. And so the point is, because again, when this is popping off, whatever, right? Especially when you start fucking with the boomers' money, when this will fuck tremendously with
Justin,
the boomers' money.
Language. There has to be kids watching with our 28 years.
Oh, my virgin ears. Yeah. Anyways, Jimmy has to be above reproach, because they say like, hey, listen, this isn't us. We haven't done anything. We did not try it. We have not talked about this. We did not try to trigger it. It is not our job to fix it. We just want to sell video games and an electronics retailer or whatever. So.
All right, before we end this, I will shave my head if this Josh shaves his head in. No, actually, I lied. Josh, you better not shave your head, because neither will I. And MOAS may never happen, but we can be happy. Thank you. Justin, any last words? What are you doing next week? Anything fun?
No, well, no, not really. I expect GME. Oh, yeah. So
just non-economical related.
Not really. Like I said, I kind of need to get myself another fast, like a serious fast. That's what I need to do that for some time.
7 days or?
Yeah, 7 days or beyond. Like my attitude is, once you get into ketosis, the hardest, just get into ketosis and just stay in ketosis.
Next time I come down to Houston, I'm down to do a 7-dayer.
Yeah, like the way you define it, I want to be at like I want to be at 12% body fat at like the high 180s. Because I mean, many people start by defining like what they want to weigh.
Justin, when you're 5'2", that must be pretty difficult.
Oh,
Justin,
are you making sure?
Justin's a short king. Don't worry.
Yeah, really short. Really short. That's why Losardo always combs his hair straight up. I don't know if I should have taken a picture of it. Like the first time Losardo and I went somewhere, it was to Vegas or whatever. I think was that your first time to Vegas? About us? Yeah.
Yeah, no, I know. Well, it was going to Vegas. Well, we met in Rebel Capitalist Live. Then we were heading down to Vegas, but I flew into Arizona, and then we had dinner with Damon.
Yeah, but the thing is, like in Vegas though, like we were heading out, and maybe it was taking me back to the airport or whatever was going on. But there was like some woman who came because like it was really dry there or whatever that day. And here's the other thing too, like in Phoenix or whatever, right? The first night, we finished up, just like, I need to go to the pharmacy the next day. Okay, great, whatever, right? And I kid you not, it's like, I need to buy hair products. And I was like, excuse me? Like products, like plural? And he's like, yeah, products. And I'm like, look, I can understand like getting shampoo or whatever. But like, oh, like no.
I don't think that was in Scottsdale our first time.
I think it was there. I'm like, well, either way, like I said, I mean, do you want any tampons to go with that, or you just need your hair products there?
Well, I mean, Justin wouldn't understand because he is not fogally blessed.
Yeah, but my point was that we get to Vegas or whatever, right? So we're checking out the last day or whatever, right? And I guess we was at Caesars or whatever. And I remember like your hair was like straight up, like it looked like a troll doll or whatever, right? Because it was so dry. I think this chick came up to you and said, "I love your hair." I was just like,
it was just some old lady that was like the restaurant host, and this was my first time ever going to a fancy restaurant. And since Justin had like a, this is actually a pretty good story. He had a green card or what is it, a gold?
Oh, it was diamond. It was there was a shenanigans for
at one of the casinos. He's not a big spender, but yeah, for some reason he still had one of those cards. So there was this. We walk into this this buffet at Caesar's Palace, I believe. It was just a super nice buffet. The line was probably 200 people. Like literally, if this is the restaurant, the line was wrapping around, going all the way into the hallway. Just fantastic. I was like, Justin, dude, I don't even think we should go. Like, let's just find some rinky-dink little place, and I'm fine. And he said, oh, no. We go to the front. We walk in. Like we're these people were waiting in line for an hour minimum. We walk in. We're the second people into this restaurant, just getting hand and fist weighted to us. Absolutely anything that we wanted. My job was just dropped. It was my first time ever had in like this incredible experience. And Justin said a line. He was like, "It's nothing like getting." What was it?
Oh, the only thing I've told G this too at Vegas. Good job, G. I've told I've said this before. The only thing better in life than getting the respect you do deserve is getting the respect you don't deserve, and I don't deserve any respect.
I not deserve that kind of respect to cut all these people, but I probably loved every single second of it.
Yeah, actually, Vegas is one of those things where like there's some income producing real estate that I want to buy. I think there's going to be a huge opportunity to buy Class C apartment complexes and redo them and actually make them like decent places to live. That's very much on my horizon.
Vegas is just a shithole. Like I really don't like it.
Well, like the strip is. The strip is really nice, and the strip it gets really shitty really quick. If you got to like Henderson or Summerlin, it's great out there. But I would say, if you're in Vegas in City Center, they've got the used to be the Mandarin Oriental, now it's the Waldorf Astoria with condos at the top. You've got the Veer Towers across the thing. So like if you want like prestige real estate, looking at those spots.
He's looking at that for personally because it's right next to the airline runway, and he likes to watch the planes because he's a freak.
I do like planes, yeah. There might or might not be a certain purveyor of air transportation. I also have my eyes set on for a takeover target, but that's not so much to make money. That's because I just want to play airline. Do you know the quickest way to make $1 million, Josh? The quickest way to become a millionaire? I can guarantee it.
Oh, well, what is it? Like I haven't.
You take $1 billion, invest it in an airline, you'll be a millionaire in no time. Airlines incinerate capital. They're really good at it.
Justin is actually very good at incinerating capital, as all of his investors, like Jeff, would have to concur with that.
I don't think Jeff's watching, but he would get a chuckle out of that. Okay, what's this? We've got a serious question here. So split dividends and swaps, if I understand it correctly, shorts are hidden in swaps. So the people who bought those shorted shares, then you get the dividend, right?
That's actually very valid. It's absolutely possible, but we don't know how their agreements are set up. And me and Justin have talked about this pretty extensively. So how would a dividend not have an effect? It depends on how these guys' contracts are signed. And there's no way to know. There's either going to have a massive effect or a very little effect. But if it's going to have as big of an impact on the financial system, I would think that they're probably just going to push it offload. Like I think that's the highest chance, but I don't know. There's a decent chance though, but I really don't want to get my hopes up too much because I think there's a decent chance that they can kind of roll over this with no big issue with the actual dividend intact. So my hopes are not too high, but I am very aware that there's a chance that they do have to pay the dividend and it could go very bizarre very quickly.
Jay, let me give you a different way of looking at this. So. And Josh, you probably just interrupt me if I speak too much for you here. I think the way that Josh and I first came to approach this was through the lens of the balance sheet. In other words, I have maintained and still maintain the music stops, as someone said earlier in the comments, when balance sheet expansion can no longer be facilitated, whether it is overt balance sheet expansion or covert balance sheet expansion. That is to say, when you have no one who's willing to lend to someone else or something freezes up, you're going to have a Lehman moment like you had in 2008. But remember what I said before too, everyone knows that the first person to call bullshit, it's going to create this massive train wreck across the board. So now you're back to the three things, cheat first or, be smart or whatever, right? So Jay, I think the answer to the question is that to the extent that they can manage it, I expect them to try to manage it, but I don't know. And this is what's so hard for me to articulate because it shows how little I understand the situation. If the people who are short can update their agreements, whatever exotic agreements they have, be it swaps, be it options, be it whatever, right? IOUs, pick anything or whatever, right? And stuff we don't even know about. As long as they can continue to grow this and let it expand, and as long as there's enough trust or honor among thieves, it probably that will only work to the short's interest. But at the same time, every time you have one more complexity thing that's added into it, that I think will work against their interest. Again, not to harp back on DRS, and I want to be really clear on this front. I do not think DRS is going to cause MOAS, but I do think DRS presents an annoyance and one more thing that has to be managed by making the stock more volatile to the short position. Hence, you have these concept of many little things that I think will start adding up that will be necessary, but by themselves will not be sufficient to trigger MOAS.
That goes right into what Josh was kind of just saying, like how they'll have more buying power. They're able to buy more, and then if they lose control over 200, you can only imagine how low the number is once it splits. Then there's all the new buying power that adds more FOMO, which then adds the ramp and adds a bunch of additional environments that you would kind of need. How often do we go to these macro conventions? Pretty often. Justin's going to one at the end of July here. I might come. I don't know. It's going to be Rick Rules. We're both 100% going to be at the New Orleans Investment Conference. That's for sure.
Yeah, so just so you know, Rule's a big name in the commodities space or whatever. And again, if you follow Girk well enough, every now and then he comments he hates shipping companies. Josh, he was called out Zim before.
There's an edge. If you think that you have an edge, because you can fundamentally analyze these companies to a very high degree. And if I like cash flow, and I mean, at one point Zim was giving me a 70% dividend. I'm sorry, but if you don't want to take, that was just one quarter. But I mean, I just played earnings virtually every single time, and that's been my most successful trading stock of all time.
Yeah. Well, anyways, so the point is that when it comes to commodities, you really, there are many wolves and vipers in this space. But that being said, too, there's also some really good people too. Again, Rule's a name that I would trust. Rick Rule, yeah, and also good with the one-liners too. So, but the point from all of this is that if you are looking to expand your education for the commodity space, if you go to there, the commodity space is it's a very old space. I'm not trying to be mean when I say that, but I'm in my late 30s right now, and I by far am away am one of the youngest people there. Josh, you would just be or whatever. It would blow their minds.
To stick out when you are younger, because people happen to they want to help the young, for sure. Yeah,
and things like commodities are not sexy right now, which is a good thing. Not to get too far off on the silver thing, but I joke the silver and the gold bugs, which I consider myself to be part of. Every time someone like J.P. Morgan, Jamie Dimon slams the price down,
I disagree with you on that, but keep going.
Oh, yeah, we're back up. So there is.
Anytime the price goes down, I like it's good. We want there to be panic. Yeah. I mean, I hate. I met some guy at the gym the other day. He was saying he's had this great strategy. It's been working fantastic for him. I'm like, well, man, what are you doing? He says, every single paycheck I get, I just put it into index funds, and it's been doing fantastic over the past few years. My wealth has been compounding. But he's like, I've run into an issue. The stock market's starting to go down. I'm getting really scared. I feel like I'm going to lose everything I want to take back with how much I'm putting in. I'm like, well, why is that? He's like, well, if everything's going down, I'm going to lose money. I'm like, is your goal to accumulate over time? And he was like, oh, well, of course, but he only wants to buy when it's going up. And for me, I'm not going to go and talk to him about this, because this is a battle that he has to fight within himself, and who's going to listen to some dumb 19-year-old kid? But to me, that's just absolutely outrageous. Who wants to, would you go to the supermarket and say, oh shit, apples yesterday were $1.50, now they're only $1.20? I'm not, this is outrageous. I don't want them. Actually though, who thinks like that? You have, if it is down in price and you want to buy it yesterday, but today it's less and you no longer want to buy it because it's down, you definitely have some things to rethink.
Yeah, and the way I view it too is listen, I want as much silver, gold, and platinum as I can get my hands on, and that means a lower price. If you want to accumulate, it's great because it takes less dollars to buy the same amount of whatever I want to go for. So, as I'm fond of saying, we should all be, or that the silver bugs, the gold bugs, etc., should all be naming their children after Jamie Dimon. They might hate the man, but they should view it as the guy that just keeps on giving a gift that keeps on giving.
You would say the same thing about Mr. Mail Lover.
Yeah, exactly. Yeah, there should be a lot of Kenneth Griffin, and what's it? Jeff Yass.
I don't know.
Susquehanna.
Let's end this shit up. Thank you guys for watching.
Names, yeah.
Thank you, everyone. Thank you very much. We'll see you on the next one.
Take care, guys.